There's a number that keeps appearing in official Chinese reserve data that doesn't add up when you trace it backwards. And I've spent the last few weeks trying to reconcile publicly reported gold purchases with what China's official reserves actually show. And the math has a gap, a big one. According to the People's Bank of China's official disclosures, their gold reserves have crossed the 2,300 ton mark. That's roughly 74 million ounces. And they report incremental additions every few months, usually in small batches of 10 to 30 tons at a time. But when you add up all the officially disclosed purchases over the last decade, you don't get to 2,300 tons. You get to maybe 1,300 or 1,400 tons. So where did the other 800 to 1,000 tons come from? That's not a rounding error. That's a mystery. And it's not a conspiracy theory to ask the question, because the data is public, the discrepancies are documented, and multiple analysts have pointed this out. So I'm going to walk you through what we know, what we don't know, and the most plausible explanations for where China's gold is actually coming from. Right now, as I'm making this, comment what day you're watching, because this story has been building for years, and if you're watching this in real time, you're seeing a pattern that most people won't understand until it's already played out. And quick thing, if you value breakdowns that dig into the data instead of just repeating official narratives, subscribe and comment FinTalk OG so the algorithm knows you're here for the actual detective work. Now, before I go further, let me be clear. I'm not saying China is lying about their reserves. I'm saying their reporting is opaque, their disclosure is selective, and there are multiple channels through which they can accumulate gold that never show up in the official reserve figures until years later, if at all. And that's not unique to China. Lots of central banks manage reserves with strategic ambiguity. But China's scale and their geopolitical ambitions make this particularly important to understand. Because if China has significantly more gold than they're disclosing, that changes the calculus for global reserve diversification, for gold prices, and for the balance of power in the international monetary system. So here's what I'm breaking down. First, what China officially reports and why their disclosure timeline is deliberately slow and incomplete. Second, the 4 channels through which China is likely accumulating gold that don't show up in official PBOC data. And third, why this matters for gold prices, for de-dollarization, and for anyone holding gold as part of their portfolio. Let's get into it. Let's start with what we can verify. The People's Bank of China publishes gold reserve data sporadically. Unlike Western central banks that report monthly, China reports when they feel like it. Sometimes they'll go 18 months without updating. Then suddenly they'll announce they've added 100 or 200 tons. Their official stated reserves as of recent reports are approximately 2,260 to 2,300 tons. That's up from around 1,800 tons in 2019 and around 1,000 tons in 2009. So on paper, they've been steadily adding. But here's the problem. When you track global gold flows, mine production, import data, and refinery output, and you try to match that to China's reported accumulation, the numbers don't reconcile. Let me show you the gap. China is the world's largest gold producer. They mine approximately 370 to 400 tons of gold per year domestically. By law, Chinese gold miners are prohibited from exporting. All domestically mined gold stays in China. Additionally, China is the world's largest gold importer. According to customs data and Swiss export records, China imports anywhere from 500 to 1,500 tons of gold per year, depending on price and demand. That gold flows in through Hong Kong, through Switzerland, through London. It arrives as bars, doors, scrap, jewelry, whatever form, and it stays in China. Chinese citizens are not allowed to export gold without approval. So you have 400 tons of domestic production, plus, let's say conservatively, 600 to 800 tons of net imports per year. That's over 1,000 tons of gold entering China annually. And that's been happening for over a decade. So where does it all go? Some goes to jewelry demand. China has a massive jewelry market. Some goes to private investment. Chinese citizens buy gold bars, coins, through banks and dealers. But even accounting for jewelry and private demand, analysts estimate there's a surplus of 300 to 600 tons per year that's unaccounted for. Over 10 years, that's 3 to 6,000 tons of gold that entered China, stayed in China, and isn't sitting in disclosed private or commercial holdings. The most logical explanation is that it's being accumulated by the state, either by the PBOC directly or by state-owned entities acting on behalf of the PBOC. Now let's talk about the 4 channels through which China likely accumulates gold off the books. Channel 1. Domestic mine production purchased directly by the state. Chinese gold mining companies are state-owned or state-controlled. The government can, and likely does, purchase a portion of domestic mine output directly before it ever hits the commercial market. That gold goes straight into state vaults and never appears in import data or commercial sales data. If the PBOC is buying even 100 to 150 tons per year this way, that's 1,000 to 1,500 tons over a decade that wouldn't show up in their reported reserve increases until they decide to disclose it. Channel 2. Imports through state-owned banks and trading companies. China has massive state-owned banks like ICBC, Bank of China, and trading firms like China National Gold Group. These entities can import gold, hold it in their own vaults, and technically it's not counted as PBOC reserves because it's on a corporate balance sheet. But it's still state-controlled, and at any point that gold can be transferred to the PBOC and reclassified as official reserves. This is a shell game. The gold is in state hands the whole time, but the reporting category changes based on when and how they want to disclose it. Channel 3. Purchases through Hong Kong and offshore vehicles. Hong Kong has been a major conduit for Chinese gold imports for years. Gold flows into Hong Kong, gets refined or recast, and then moves into mainland China. Some of that is commercial. Some of that is state-directed. China can use Hong Kong-based entities to accumulate gold without it appearing in PBOC disclosures. And because Hong Kong operates under different reporting rules, the trail gets murky. If you're accumulating 50 to 100 tons per year through Hong Kong structures, that's another 500 to 1,000 tons over a decade that's invisible in official data. Channel 4. Undisclosed bilateral deals with gold-producing nations. There have been reports, some confirmed, some speculative, that China has struck deals with African, South American, and Central Asian gold-producing countries where they provide financing, infrastructure, or loans in exchange for gold deliveries. These deals wouldn't necessarily show up in customs data if the gold is delivered directly to Chinese vaults offshore, or if it's structured as loan repayment rather than a purchase. If China has been doing even a modest amount of this, say 20 to 50 tons per year, that's another 200 to 500 tons over a decade. When you add up these 4 channels, you can easily get to 800 to 1,000 tons or more of gold accumulation that never shows up in the PBOC's reported reserve figures until they decide to acknowledge it. And this isn't speculation. Multiple analysts, including those at Bullion Star, Gold Money, and independent researchers who track Chinese gold flows, have published similar estimates. The mystery isn't whether China is accumulating more gold than they report. The mystery is exactly how much more and where it's stored. Now let's talk about why China does this. Why not just report the real number? There are 3 strategic reasons. Reason 1. Avoid spooking the market. If China announced tomorrow that they actually hold 4 for 5,000 tons of gold, gold prices would spike. That makes future accumulation more expensive. By understating their holdings, they keep prices relatively stable and continue buying at better levels. It's the same logic as any large buyer trying to accumulate without moving the market. Reason 2. Avoid signaling de-dollarization too aggressively. China still holds over $1 trillion in U.S. treasuries. If they openly disclosed massive gold accumulation, it would be seen as a direct move away from the dollar and toward a gold-backed or gold-influenced monetary system. That invites political backlash, potential sanctions, or countermeasures from the U.S. By accumulating quietly, they build the position without the confrontation. Reason 3, strategic ambiguity as a negotiating tool. Not knowing exactly how much gold China holds creates uncertainty for Western central banks and policymakers. Uncertainty is leverage. If China ever wants to use gold as a geopolitical bargaining chip, whether in trade negotiations, currency discussions, or during a financial crisis, having undisclosed reserves gives them flexibility. They can reveal the real number when it's strategically advantageous to do so. Here's the other thing. China has a history of this. In 2009, they reported 1,000 tons of gold reserves. That was the first update in years. Analysts had been estimating they had more, but the official number was around 600 tons. Then, suddenly, they announced 1,000. Where did the extra 400 tons come from? It had been accumulated slowly over years and not disclosed. They did the same thing in 2015, jumped the official number by several hundred tons. And they're doing it again now. This is their playbook. Accumulate quietly, report selectively, and reveal the real number when it serves a strategic purpose. Now let's talk about the evidence. What data points support the theory that China has 1,000 or more tons of unreported gold? Data point 1. China's gold imports massively exceed their reported jewelry and investment demand. The World Gold Council publishes demand data. Chinese jewelry demand is around 600 to 700 tons per year. Investment demand is 200 to 300 tons. That's 900 tons total. But imports plus domestic production are well over 1,000 tons per year. Where's the surplus going? The only plausible answer is state accumulation. Data point 2. Swiss export data shows massive gold shipments to China that don't appear in Chinese import disclosures at the same volume. Switzerland is a major gold refining hub. They export hundreds of tons to China annually, but Chinese customs data often shows lower import figures. That discrepancy suggests some gold is entering China through channels that aren't fully captured in official trade statistics. Data point 3. Chinese state media and officials have occasionally hinted at larger gold holdings. In interviews and state-published articles, there have been references to China's gold strategy and comments suggesting reserves are higher than officially reported. These aren't official box statements, but they're breadcrumbs. When state media in a country like China floats a narrative, it's usually not accidental. Data point 4. The infrastructure exists to store massive amounts of gold. China has built enormous high-security vaults in multiple locations. They have the logistics, the security, and the refining capacity to handle thousands of tons of gold. They didn't build that infrastructure for the 2,300 tons they officially report. They built it for a much larger position. Data point 5. China's behavior in other strategic commodities mirrors this pattern. They've accumulated massive stockpiles of oil, rare earths, copper, grain, all with strategic ambiguity about the exact quantities. Gold fits the same pattern. It's a strategic reserve. They treat it the way militaries treat ammunition stockpiles. You don't advertise the exact number to your adversaries. So what's the most likely truth? My estimate, and this is shared by many analysts who track this closely, is that China's actual gold holdings are somewhere between 3,500 and 5,000 tons. That would make them the second or third largest official holder in the world, behind the U.S. and possibly Germany. The U.S. reports 8,100 tons, Germany reports 3,300 tons. If China is sitting on 4,000 to 5,000 tons and they're still adding 200 to 400 tons per year, they could overtake Germany within a few years and start closing the gap with the U.S. Now here's why this matters for you. If China has significantly more gold than reported, and if they continue accumulating at the current pace, they're building a foundation for a gold-backed or gold-influenced monetary system. That doesn't mean a return to a full gold standard. But it does mean gold plays a larger role in international trade, in reserve management, and in the eventual replacement or supplement to the dollar as the global reserve currency. And if that happens, gold prices go significantly higher. Not to 3,000 or 4,000. To 5,000, 7,000, maybe 10,000 over the next decade. Second, if China reveals their real gold holdings at a strategic moment, say during a financial crisis or during a major geopolitical negotiation, that revelation itself will move markets. Gold will spike. The dollar will come under pressure. And anyone who's positioned in gold ahead of that moment will benefit massively. Third, this validates the thesis that physical gold, not paper gold, is what matters. China isn't buying geld shares. They're not trading futures. They're accumulating physical bars, taking delivery, and storing them in sovereign vaults. That's the ultimate vote of confidence in gold as a monetary asset. So what should you do with this information? If you're holding gold, this is confirmation that the world's second largest economy and one of the most strategic thinkers in global finance is betting big on gold. That should give you confidence. If you're not in gold and you're wondering if it's too late, consider this. If China has 4,000 tons now and they're targeting 10,000 tons over the next decade, they're going to be a persistent, large-scale buyer. That's a floor under the market. Pullbacks are buying opportunities, not reasons to panic. If you're trying to decide between gold and silver, understand that China's play is gold-focused. They buy some silver, but the strategic priority is gold. So if your thesis is following the smart money, gold should be your core position. Silver can be a satellite holding for industrial, demand, and volatility plays. Here's the uncomfortable question. What if I'm wrong? What if China's official numbers are accurate and there's no hidden gold? Then, where's all the imported and mined gold going? Jewelry demand and private investment don't account for it. The data doesn't lie. Gold is flowing into China and not flowing out. It's going somewhere. If it's not state reserves, then it's private hoards on a scale that would still be bullish for gold because it means Chinese citizens are massively long physical metal. Either way, the gold is being accumulated and held in China. That's bullish. Let me also address the skeptics who say even if China has 5,000 tons, so what? The U.S. has 8,100 tons. The U.S. is still the dominant reserve currency. True. But the trend matters. The U.S. hasn't added to gold reserves in decades. China has added over 1,000 tons officially and possibly 3,000 to 4,000 tons unofficially in the last 15 years. The trajectory is clear. And gold isn't the only piece. China is also building alternative payment systems, currency swap agreements, BRICS coordination, and trade deals that bypass the dollar. Gold is one pillar of a multi-decade strategy to reduce dollar dependence. Here's my final take. The 1,000-ton mystery isn't a mystery. It's a feature, not a bug. China is deliberately opaque about their gold reserves because transparency doesn't serve their interests. They're accumulating quietly, storing strategically, and they'll disclose when it's advantageous. If you're waiting for official confirmation before you position in gold, you'll be late. The smart money is already positioned. Central banks are buying. China is buying. And they're not buying because they think gold is going to 2,500. They're buying because they think it's going much higher and because they see a world where gold plays a central role in the next iteration of the global monetary system. Tell me in the comments, do you think China has more gold than they're reporting? And if so, how much? I want to see if the community understands the scale of what's happening. And if you think this is all nonsense and China's numbers are accurate, tell me how you explain the import and production data. I'm genuinely curious. If this breakdown gave you a new way to think about what's happening behind the scenes in the gold market, subscribe and comment FinTalk OG and share this with someone who's trying to understand why gold keeps going up despite all the mainstream skepticism. One last thing. This is analysis based on publicly available data, trade statistics, and informed estimates from credible analysts. It's not financial advice. China's actual reserves are not publicly verifiable. I could be wrong about the numbers. Do your own research and make your own decisions. All right, stay curious, follow the data, and I'll see you in the next one.